The markets were pretty rough this week, so we're going to talk about what happened in my portfolio, activities, all the dividends I made, and what's going on in the market and where I see things headed. So before I go any further in this video, I'll ask if you enjoy this type of content, you subscribe to the channel, you turn on post notifications, all that good stuff. Give the video a nice like. Now let's just go ahead and get straight into it. So my portfolio right now is sitting about $11,877 and 79 cents. We're down $278 this week, which is about 2.3% in the red. On Friday alone, we went down 3.13%, which is $383. Now, this week has been all over the place. If we go ahead and look at SPY, we're seeing that the past week, the market was down 2.43%, and on Friday alone, the market fell 3.7%. There's a lot of different factors happening right now, but if we go ahead and just look, there's a lot of talks right now. NASDAQ slides 2%. Dow falls more than 350 points in sharp reversal as rising rates weigh on stocks. So if we just go ahead, and this is a kind of important part that I highlighted. Here's a little quote from Joseph Kalish, Chief Global Macro Strategist at Ned Davis Research. Although we expect inflation to peak very soon, if it hasn't already done so, continued supply chain disruptions and a slow increase in the labor force due to retirements and concerns over COVID could easily keep the inflation rate more than the Fed's 2% target. As a result of this, the Fed may need to hike current rates more than the peak 3.25% to 3.5%. So that's pretty big information and news if you ask me. We're also seeing that there's a lot of concerns. Jerome Powell did say that the central bank is ready to tighten monetary policy more quickly, and indicated that rates will likely raise by 0.5 percentage point during the meeting in May, which I do want to say is like May 4th, but I'm not exactly sure about that. There's a lot of different news in the market, Ford losing a lot of money, Europe's economy with the Russian gas cutoff, shortage of supply, and a ton of different things, None of this is necessarily going to automatically move the whole market, but there's a lot of concerns right now. If I'm not mistaken, I've heard there's a new variant of COVID in Europe. Don't quote me on that. I would look it up before, but I've heard something about that. So keep that in mind. But looking at my portfolio and how everything has gone in there, activity for the week since April 25th, I got a lot of dividends. I got $8.74 from XYLD on April 26th, which was this Tuesday. Then I also got 87 cents. And then on Thursday, there was a stock merger, so it gave me some more Vici, and it sold off my MGP holdings. So there was a little merger right there, both a REIT. And then we have Mo Altuve Group up $11.08 in dividends on Friday, and I also got $3.03 from SPHD in dividends, which is incredible. Just this dividend income coming in, nothing to complain about. So looking at track my dividends, my portfolio is sitting about a 3.43% yield on cost compared to a portfolio yield of about 3.62%. My annual income is sitting at $433, which is looking pretty good in my personal opinion right now. Expected income for May is going to be $22, which is the lightest month of the quarter every single time. So we'll go ahead and see how that does, but $22 coming up pretty soon. Looking for the next week of May, we'll see. I should get about $1.44 in dividends. I'm not exactly sure from who. We'll see right here. It's going to be from Lowe's. Okay, so that'll be pretty good. Hopefully these dividends do come in. Nothing to complain about dividend income, but this was a little bit of a shorter video. I'm going to wrap it up right here. Thank you for making it to the end of this one. Subscribe to the channel, turn on post notifications so that you don't miss out on any future videos. Thank you again. Leave a comment, all that good stuff. Check out M1 Finance if you haven't already. Use the link in the description or the pinned comment down below. And I will see you at the next video.